Aussie QE is going to the moon. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Yahoo Finance because, well, I think it predicts a very grim future for Australia. Now, the scale of Australia's bond buying spree is closing in on the Fed. Well, is that something to be proud of, everyone? Really? I don't know, but, well, frankly, no, I don't think it is. I think it's just a sign that, well, we're falling in line with all of the other reserve banks and federal banks around the world that are just going on bond buying sprees to try and prop up the various economies around the world. And we can just see here from this chart, because our very own governor, Philip Lowe, said, 100 billion. Yep, no problem. But then as much as is necessary. As much as is necessary to meet their target. So, QE to the moon, guys. QE to the moon. And just this little chart here. See this orange line there? That's the Bank of Japan. You know what this chart is telling us? This is their balance sheet. The balance sheet as a share of GDP. Look at that. How? And of course the Japanese economy. You know what? Let's jump over here to the right. And I wanted to show a few other things here. We've got the Australian dollar. We've got gold going up nearly 1950. Silver has shot up. Even Bitcoin has gone up. Everything is flying up because everything is obviously, jumping out of the US dollar just with the turmoil at the election that's never going to end. So let's have a look here. Let's go to Japan, Japan. Let's look at their GDP growth rate. Let's look at their unemployment rate. Let's look at their inflation rate. We'll just bring these three up to have a look. So their GDP growth rate. And, well, understandably, they've been in trouble like we all have. But let's drag that out to 10 years. Let's have a look. Okay, so it's very lackluster, isn't it? Very lackluster. We'll go to 25 years. There you go. Look, there's the GFC and boom, 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 all over the place. Let's see the max data. There you go. Japan has been a zombie economy for quite some time. My greatest fear is that we're going to wind up like Japan. I don't think it'll happen. I think we'll have more immigration coming in no matter what goes on, but, that tap's been turned off now. I remember when I visited Japan as a student. I was on my way to Berlin, and I had a stop off in Japan with a uni mate was living there, and we just painted the town red on a weeknight. It was a crazy night. It was lots of fun. And the thing is, I remember going down the subways and going, why do they have all these barriers everywhere? And he says, economy, to stop people jumping in front of the trains. So it definitely is there's a lot of issues there. We know that their economy is pretty much stagnant in many ways. Here you go. Here's their unemployment rate. It was quite low, and now it's just shot right back up to 3%. But look at the the GFC was over 5.5%. And there's a whole raft of social issues as well that are materializing in Japan. Just look at all of the tremendously low birth rates that they have. You know what? Let's bring that up. Japan birth rate. And there you go. The birth rate for Japan was 7.3 births per 1,000 people, a 1.28 decline. There you go. So they're doing pretty low, everyone. They're doing pretty low, and you can see here why it's so low. You hear all the stories about young couples in their 30s not even having relationships. So, while this is just a sign of their bond buying spree, that is just completely unnatural. Should the size of the balance sheet for a reserve bank be over 100% of the GDP of a nation? And, while we're at it, I'm going to bring up my favorite website, the Observatory of Economic Complexity. And here we have Australia. But for once, we're not going to look at Australia. We're going to look at Japan. Let's look at Japan. So, the economic complexity is number one in the entire world. Wouldn't that be fantastic, guys? Their exports are 713 billion. They're fourth in the world. Exports per capita, they're 69th in the world. And let's have a look. Their GDP is $4.97 trillion in the world. They're ranked number 3 in 2018. We can see here. Let's look at their exports. Look at that. They're tanked. Everything is tanked. Export growth has tanked. Their destinations have just tanked everywhere. Everything is down. So why are good times coming anywhere in the world, guys? So let's have a look. Total monthly exports are down again. But we'll have a look here just to see what they're exporting and look at the complexity of what they're shipping out and where it's heading to. So the most recent exports are led by cars, vehicle parts, integrated circuits. Looks like China is number 1, then the United States. Australia, we're at 2.33. So we're not really that significant on the world stage of things. I really think our opinion of ourselves is a lot higher than it should really be. And I think that's got more to do with just people not understanding the scale of our economy. So let's jump back here and have a look at this article, because it looks like, well, no, it doesn't look like the RBA is pretty much committed to buying as many bonds as necessary. Now, how are they going to back out of it? Who's going to buy the bloody things in the future? That's the question. And are we just going to be stuck at such low rates? Look at what happened when the US tried to correct. When the Fed tried to normalize rates, it failed. Didn't work. Are we trapped down here at this level? So if we're going to see more and more bond buying, and that's going to flood through to the banks or other third parties, where's that going to materialize? Is it going to materialize in the stock market? Are we going to see that like what's happening in the US? Or is it going to materialize in the housing sector? There's more money going to be lent out there. Interest rates are low. And is buying housing, is it one of the only ways you can protect or at least diminish the damage of your wealth? I know there are other people. We had a look at gold. We had a look at silver. Would you call those mainstream yet, guys? I couldn't imagine they're mainstream. There's so many people you talk to think you're nuts if you have a piece of silver. And Bitcoin, sure, it's growing. It's going up a lot. And I think that's to do with the PayPal starting to jump on board with it. But I get the feeling PayPal are using it as a test case to develop relationships for central bank digital currencies. And I'm quite concerned about the rollout of those. Just think about how much power it could give these organizations if they could control every single unit of money that's flowing through. So let's have a look. So the Reserve Bank of Australia's new quantitative easing program is set to close in on the Federal Reserves when measured against the size of the economy, highlighting the scale of its latest stimulus efforts. The plan to buy $100 billion of bonds over 6 months kicks off with the RBA announcing it will purchase $2 billion in federal government securities at Thursday's auction. Governor Philip Lowe said Tuesday he estimates the RBA's balance sheet will have almost tripled once purchases are complete by mid-2021 compared with the position at the start of this year. Bill Evans, chief economist at Westpac Banking Corp, reckons the RBA's assets will swell to around $550 billion, or 27.5% of gross domestic product. I mean, that's just insane. The Fed's balance sheet is sitting around 34% of GDP, and most economists don't expect it to ramp up the pace of its asset purchases anytime soon. The RBA, and remember, this $100 billion isn't all that they're going to spend. They're going to buy more bonds as necessary to achieve their target on top of this $100 billion. The RBA will be very rapidly closing in on the Fed from a standing start, Evans wrote in a note. He added that the RBA has also certainly left open the option for further QE. QE is here, guys. I was talking about it last year. Well, it's here in Australia, the Aussie QE. The international backdrop is central to the RBA's decision to add long-dated bond purchases to existing 3-year yield curve control plan. It seeks to narrow the differential with US and other nations' longer-dated yields to discourage investors from pouring cash into Australia and driving up the currency. So let's jump and have a look at the Australian dollar. Like I said, now it's at 72.8 US cents. I think that's got more to do with the US election and the value of the US dollar falling down. But if we jump over to the Observatory of Economic Complexity, what that's going to do, if our dollar goes up, all of our exports are going to get more expensive on a relative level around the world. We're already having China impose restrictions and refuse to accept a lot of our exports, telling people they can't import them anymore. That's a big chunk of our exports, 35.5%. With a higher dollar, though, all of our imports will become more affordable, and that might have a cost of living impact. So it's an issue. But sure, our little trinkets and crap may be more affordable, but as a international student destination, a tourism accommodation destination, a international housing, real estate shop, sorry, wrong chart, will all take a hit. So let's jump back to this. So, global easing. Su Linong, head of Australian Economic and Fixed Income Strategy at the Royal Bank of Canada, estimates that after accounting for RBA purchases, net issuance of Commonwealth and state government bonds available to private sector buyers could move into negative territory over the next 6 months. This will lend ongoing, powerful support to the bond market, she said. The spread of COVID in Europe has prompted lockdowns across the continent and spurred the ECB to signal it's likely to deliver additional stimulus at its next meeting. The Bank of England is similarly expected to ramp up its QE today when new lockdown restrictions come into force. The US is similarly suffering a spike in infections. Phil Odongo, an economist at Deutsche Bank AG, notes that the QE precedent globally suggests it is virtually impossible the RBA will be able to simply end its program after 6 months. There you go. The precedent has been set, everyone. It's going to be impossible for us to get out of this mess. So what does that mean? Where will the inflation materialize? Where is the Cantillon effect of new money pumped into the system going to materialize? So our early expectation is that it will be replaced with another program for another 6 months, he said. Assuming the first is successful, we assume for now the second will be smaller, and we would consider a tapered QE Mark II program as a measure of success. A tapered second round of money printing, a measure of success. Fantastic, everyone. Does this seem natural to you? What do you think? As always, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time.